Welcome to the Moore Realtors Weekly St. Louis Real Estate Market Update. I'm Dennis Norman, one of the brokers at Moore, and if you'll give me a few minutes of your time, I'll bring you up to date on what's happening in the St. Louis housing market. Let's jump right in with the real estate news. Here are just a few of the headlines from this past week from St. Louis's best local source for news and information on the St. Louis real estate market, and that is stlouisrealestatenews.com. You see it down there. This week, a little light on news with Thanksgiving week, but we had our weekly article from a local mortgage banker giving an update on interest rates, as well as discussing why FHA provides a good alternative for many home buyers in today's market, particularly those buyers that might be challenged in the area of less than perfect credit, or perhaps do not have a significant amount of cash for a down payment. Article on a local mortgage operator that pled guilty to a multi-million-dollar fraud scheme. And then finally an article on increase in St. Louis home sales in October, however with a continued decline in prices, something I've been talking about for a while and I'm probably going to continue to see. While I believe we're at the bottom of the market here in St. Louis, I keep referring to it as a rocky bottom. We're going to see it bounce around for a while. Recovery is going to be long and extended. But at least we're seeing the sales activity pick up a little bit, which I think we'll continue to see. But we're going to see prices probably continue to fall slightly. I don't see anything dramatic happening, and there'll be some, as we talk about often, real estate is very local, and this is why you really need the advice of a well-informed professional, such as those agents we have available with our company at Moore Realtors. But it is very local. There are local markets where prices are actually on the rise, but overall for the metro area, we'll probably see prices, the median prices, deteriorate a little more over the next year or so. Now we'll jump into the market data. The first few slides here are representative of the entire St. Louis metropolitan area, so the St. Louis MSA, which would include Metro East, some counties over in Illinois, and so this is a look at the overall market. This is all real-time data, so this is based upon what's on the market now, which is a real much more accurate indicator in a lot of ways than a lot of the sold data or what happened 6 months ago. So this is what's happening out there today. For the metro area, we can see the median asking price of homes for sale is about $179,000. We've got some little fun facts here, like our most expensive listing, $7.2 million. Average asking price per square foot, about $97 a foot, and it's pretty much, it's hovered around the high 90s or 100 for a while. Average days on market's continuing to grow. It's about the 6-month mark now, 181 days. And then you can see other information is there. And you can get this and a whole lot more on our website at mo-re.com. And you can see all the market stats, but this is just a quick overview. So I'm going to skip down here to the Market Action Index. This is our trademarked Market Action Index, and it's at 15, which is up slightly. Quick refresher on this Market Action Index. A 30 would indicate a perfectly balanced market between buyers and sellers. This takes into account the inventory of homes for sale, how many new listings are entering the market, how many listings are leaving the market, what are prices doing, what's the ratio of price to list price. Lots of things go into this. But anyway, at the end of the day, if it's a 30, that would be indicate it's a balanced market, not favoring buyers or sellers. As it goes above a 30, up to a maximum of 60, it's a hot market, it's favoring sellers, and the higher the number gets, the hotter it is. Haven't seen that in a long time. Actually, we haven't seen it since this index was created back in 08. As it goes down below 30 to a low of 0, it's the farther it goes, the colder the market is, and the more it favors buyers. We've been down in that range for a long time, but as you'll see on this next chart here, since this Market Action Index was introduced in 08, it's peaked at about a 16. So we've been in a cold market, or a buyer's market, since its inception. And it went down to a low of about 11.5. We can see here recently we had a little run up and then it dipped back down. We're definitely, the market appears to be heading into a healthier direction. It's got a long ways to go, but it's good to see this. This next chart is median price trend over the past year. The orange line shows a 90-day average of home prices. The black line shows a 7-day average. So the black line is a little more jagged, but it's quicker to show a trend or where the long-term trend is headed. We can see the orange line shows prices dipped back in March down to about 172 for the metro area after being at a high at about 184. Went back up to that 184 range and then have been steadily falling back down to about the 181 range it's at now. But we can see the black line, the 7-day average, is clearly indicating more downward movement in home prices. In fact, heading down to about the 179 mark here. So probably going forward, if this continues, we're going to see that orange line probably steadily head downward. Now we're going to jump into data that's a little closer to home here and where the bulk of our market is made up. This is what I call the St. Louis 5-county area, which is really 4 counties in one city. But in these next few charts, I include data from the city of St. Louis County, St. Charles County, Jefferson County, and Franklin County. This first chart here shows the number of sales per month in the blue bars, and the green line shows the average sales price. And again, remember, average prices, it's not as accurate as median prices. Average prices, an average is more affected by an anomaly in the market, like a extremely low sales or a couple of extremely high sales, but nonetheless, that's what this is. And we can see the sales peaked back here in the summer in June, over 2,000 sales, maybe 2,100, 2,200, as we'd expect, and then pretty much have declined. I mean, they declined quite a bit in July and then jumped back up, but October ended at about 1,600, 1,700 sales, and we can see going into November here that it's down, showing about 1,100. Now again, sales data lags 7-10 days behind the actual closing date, so even though we're nearing the end of November, there's still quite a bit of data to come in here. So November could very well end up being around October's mark by the time it's done. As far as average home prices, we can see they've continued to drop. Dipped down to a low in October, and looks like they may be trending upward a little bit here coming into November, so we'll have to watch that and see. This next chart shows the median home sale prices and average days to sell over the past year. So again, the median price, a median price is usually more indicative of reality, as the median represents the price that half of the homes sold above that price and half sold below that price. So the green line shows median sales prices. We can show they started about 140 a year ago, dipped down here below 120, peaked back up in the middle of summer, July, at about the 140 mark, then dipped back down, I don't know, close to 120, and have kind of flattened out the last couple of months, which flat is better than declining, so that's the positive spin on that. Days on market, the blue line, how long it's taken to sell homes, and this is a, you can see here, this is a median on the days on market as well. We can see it hit a low of maybe 65 days back here in the summer, has risen to 80-something days, and now looks like it might be trending downward. Now this is a median of the days on market versus what I showed earlier for the whole metro area. It was 180 days, I believe, or 181 for the whole metro area, but that was an average. But so there's going to be a little difference here, but still we can see this core market, or in this core market in the St. Louis 5-county area, homes do seem to be selling quite a bit faster than in the overall metro area market. This next slide, now this one shows this is my Realtor scorecard. This shows the ratio of sales price to list price. So this chart has nothing to do with what homes are worth. This is more an indicator of how good a job are listing agents doing. How much do they know about the market? How well do they know the market in terms of pricing homes, and how good of job are they doing conveying this information and having the two sellers and having the tools and resources available to them to help educate sellers to where sellers understand that they are right and price their homes right. This is very important because today in a market like what we're in and have been in, you are punished for overpricing your house. There was a time back in the boom that yes, it didn't matter. Go ahead and list your house at whatever price you wanted to, because eventually the price would catch up. No matter how grossly overpriced it was, as long as you were patient, prices were rising quick enough where you pretty much could come out of it. That is not the case today. Today, you need to think in terms of similar to how you would with a new car. Everybody seems to understand that when you buy a new car, the minute you drive it off the lot, it's worth less than what you just paid for it. Well, that's how you need to look at your home when you're listing it for sale today. The minute you put it on the market, it starts going down in value. Now, that's not true in every market. Like I said earlier, we do have some local markets where prices are very stable, some where they may even be slightly on the rise. But you still want to have that mentality, though. You really want to come out priced accurately to start with, because overall you're just going to be hurting yourself by being overpriced. And this is where, again, I'm touting our professionals at More Realtors, but we do have the market data. We've got more market data and can use the market data and apply the market data better than any company in town. And that helps us educate our agents and our brokers, and it helps them educate their clients, whether you be a buyer, a seller, or an investor. These are all tools and resources that you need to help you understand the market, and it'll help, in this case, it'll help sellers come out and price their homes accurately, get them sold quicker for a larger percentage of their listing price, and before their prices deteriorate any further, or before more foreclosures come on the market to bring their prices down. So back to, now I'm done with my sales pitch, back to the chart. We can see the green line shows what the final sales prices were in comparison to the original list price when that home first hit the market. And the blue line shows what the price, the sold price was relative to the list price at the time of the sale. So after any adjustments were made along the way and the seller lowered the price and kept trying to chase the market. We can see, basically that's been pretty steady. The blue line, more or less, homes have been selling in this 5-county area for about 96% of what they were listed for at the time of sale. So that shows me that eventually the listing agents and the sellers are coming around to closer to where they should be. This number should be higher than 96%, but that is at least showing eventually they're ending up there. Unfortunately, sellers are losing a lot of ground along the way, because we can see down here, pardon me, we had a peak of about 92%, but basically we were at about 90%. So homes are only selling for about 90% of what they were originally listed for. So that means they're coming out overpriced for the market pretty dramatically. And while they sit there on the market, home prices in general are falling. So that just means you start out overpriced, and the longer you sit there, the more overpriced you are. But eventually they're lowering the prices down to the point they need to, and they're selling for about 96%. This shows a long-term look at what's been going on with list prices and sales prices in this 5-county area. This is over a 10-year period, so it covers the entire housing, I guess bubble, sorry, and the burst, as it encompasses this entire build-up to one of the longest running, strongest housing markets we've had, and then everything that's happened since then. The blue line represents median list prices, and we can see that rose from about 130 to well above 160, maybe 165, 170 even in 2006, and then it's been on the decline since. We can see for the past year here it's still headed downward, but sort of flattened out, while sales prices have kind of followed suit, but we can see there's a bigger gap growing here. So once again, a widening gap between what the list prices are and what the actual sales prices are. Okay, and this is just this has been a quick overview, or as quick as I can do, of the overall St. Louis market. Again, real estate is very local, so the conditions in your subdivision or in your 100-block or in your area could be quite different, and that's where we're here to help. At More Realtors, we have the tools and resources to help you. We also are happy to announce that in the past week or so, we finalized a deal to. We've got an office that has joined us, and many of their agents have come on board. We've opened a new office in Creve Coeur, and we welcome those new agents, and we now have more resources available to help you. And so again, you can go to our website at mo-re.com, and from there you can find a lot of housing statistics and charts like what I've shown you here, and like what you'll see a little sample of on the screen. You can subscribe to get weekly updates automatically of a specific market that you're in, that you want to follow. We have a newsletter it's a monthly electronic newsletter, comes out via email. You see it in the upper right hand corner here. It's loaded with some news and information, a lot of charts on the market, a lot of great stuff. You can subscribe to that at our website, mo like Missouri -re like realestate.com. That's mo-re.com. Or stlouisrealestatenews.com. You can go to the upper right hand corner, you'll see a box to subscribe to the newsletter as well. Down here you see the arch. I don't know what you're watching this on, or where you found the video, but you can get these market updates, which we produce weekly in a variety of places. This is showing our our iTunes podcast. You can go to the iTunes store, search St. Louis Real Estate Market, look for that arch there, and you can subscribe to our podcast. You can get these market updates on our website, mo-re.com, on our YouTube channel at youtube.com/morerealtors, or on our Facebook page, facebook.com/morerealtors. There I am. There's my partner, John Williams. We, along with our staff, are here and would be happy to help you. And you can contact me at any time at 314-332-1012. You can get John at 314-414-4114, or either one of us with our first names at mo-re.com. Okay, there's all the disclaimers and the legal stuff. And until next week, that's it. God bless you.